Whether you're new to bookkeeping or experienced with bookkeeping, in this video I'm going to be breaking down the exact steps that you need to know to be able to understand the bookkeeping process. The definition of bookkeeping is the processing of financial transactions. So basically what that means is that you are organizing the financials that are coming in. So it is the processing and recording of financial transactions, okay? And this can actually be for your personal and business. To keep things simple, we're just going to focus on the business for now, okay? So as it relates to being able to record transactions, as it relates to business, you have your income, you have any expenses, okay? Those are the two main categories, and if you understand those two different categories, that's really going to give you the foundation to be able to understand this. So before we even talk more about bookkeeping, one of the misconceptions is that bookkeeping and accounting is the same, and they're actually two different concepts, okay? Bookkeeping is the actual process of recording the transactions, and accounting is actually interpreting the different transactions, and that's the power of accounting. With that, one of my greatest skills is being able to understand the numbers that are coming in an organized manner, and to be able to help you as a business owner be able to make better decisions. As it relates to bookkeeping, there's actually two terms that you really want to be familiar with, and that's debits and credits. So it's not necessarily going to be debits and credits as you're used to with a credit card or a debit card. It's going to be completely different in the bookkeeping world. As it relates to bookkeeping, a debit is going to be an increase in either your expenses or it's going to be an increase in your income. Versus a credit, it's going to be an increase in your liability or increase in your equity. Basically, where you're going to want to record these is either in a ledger and a journal. Ledgers are designed to categorize the transactions, and journals are there to be able to list it in a chronological order just so everything flows correctly. As it relates to the double entry system, as something is coming up, something's also going down, okay? And that's how things are able to quote unquote be balanced. So you cannot have a transaction, let's say you can't have a debit without an opposite equal amount of a credit or debit to be able to balance that out. So let's say for instance you took out a loan for $5,000. What that's going to do is now you receive $5,000 in cash, so that's going to be an increase in the cash account, but then it's also going to be an increase in your liability account. Why? Because you have to go ahead and pay that off. As it relates to this double entry system, you have $5,000 in cash and $5,000 in a liability. As you pay off that liability, now it's going to reverse, and then that liability account is going to be decreasing by the amount of cash that you're paying towards the liability. And as it relates to different accounts that you need to know with bookkeeping, you want to pay attention to this because it's going to be really powerful for you to understand. 5 main categories that you need to know right now is going to be your assets, it's going to be your liabilities, it's going to be your income, it's going to be your expenses, and it's also going to be your equity. Assets is going to include such things as cash, inventory, maybe a business vehicle. All these things are considered assets for your business. On the other hand, a liability is going to be exactly what you think it is. It's going to be loans. It's going to be things that you end up owing money on. Equity is pretty much the owner's interest within a company. Expenses are going to be things that you're spending money on, such as like rent, utilities, things that are spending and coming out of the business. And then you have revenue, which is going to be able to come out of sales. Now, as it relates to being able to organize all this information in a way for you to be able to make better business decisions, you're going to have to create what's called a financial statement. And when it comes to financial statements, there's actually 3 main types of financial statements that you need to be aware of. The first financial statement is going to be the balance sheet. And on the balance sheet, you're going to see assets, you're going to see liabilities, and you're going to see equity. The next type of financial statement that you need to be aware of is what's called the income statement. The income statement is going to have your revenue, expenses. It's also going to have your profit on there as well. And last but not least, you're going to have your cash flow statement. Your cash flow statement is going to show you the cash inflows and it's going to show the cash outflows. So it's going to help you be able to better manage and see exactly how your cash is moving, because at the end of the day, if your business does not have cash, it's going to be very difficult for that business to be able to survive long term. So some best practices as it relates to bookkeeping: you want to make sure that you're doing it on time. It could be very easy to get behind on bookkeeping, so you want to make sure you're doing it on time to really make sure you're putting yourself in the best position possible. In addition to doing it on time, you want to make sure you're categorizing everything in the right transactions, make sure you're classifying it in the right different categories. And last but not least, you want to make sure you're staying informed with different tax obligations during the year. So as you know, you could probably be able to do all of this manually, okay? And that's how people used to do it back in the day. They would have these big documents, these big books, okay, called ledgers and journals, and they actually manually wrote it out left to right, debits and credits, debits and credits. But now these days we have technology that can go ahead and do this for us. Some of the most popular technologies that are out there as far as bookkeeping is going to be QuickBooks. You got FreshBooks. You got a whole bunch of amazing softwares out there. It just really depends on your preference and what you're looking to do in your business. Some advantages of being able to do this is that actually Additionally, a lot of it's automated. So what you can do is you can go ahead and connect your bank account to a lot of these different softwares to be able to give you more up-to-date information. It's going to reduce errors and mistakes because, again, the AI and the automation is going to be able to determine and basically just read the transaction and give you a suggestion on what that category could be as it relates to your bookkeeping. And once it organizes all that information for you, then it can go ahead and create those financial reports and those financial statements that I mentioned, right? The three ones that I mentioned: the balance sheet, the income statement, and the cash flow statement. And as it continues to get up to date, they keep making it better and better to reduce errors and mistakes and really make sure that you get the most accurate and best information possible. So we talked a lot about bookkeeping in this video, and I also mentioned that you need to be aware of tax obligations and tax liabilities. And if you want to learn how to be able to save more money in taxes, make sure you check out this next video over here, and I'll see you in the next video.